All right. Good morning, everyone. Welcome to Daily Mortgage Rates Live with the Mortgage Calculator. We're going to wait just a few minutes here to get started, give everybody a chance to jump on, and give us a chance to go live on all the different platforms. We did put the chat up there on the screen, so feel free to drop a comment in the chat there. I see some people already commenting. And hope everybody is having a great Friday morning. We have a special topic to go through today, just like we do every day after we check out the live rates. We're going to talk about 1099 loans. So just hang tight with us, drop a comment as you come in there into the chat, and we'll get started in just a minute. Hope everybody had a very productive week. Time to push forward all the way to the end through Friday. And for you loan officers out there, of course, the weekend is always a great time to make calls and prospect as well. So some of you probably gearing up for a big work weekend as well. All right. Good morning, everybody checking in there in the chat. Adam, Jennifer, other Adam, Christina, Samantha, Mark. All right. Mercedes, Matthew, Jason. Thank you, everybody, for tuning in. We're waiting just a minute here to get started. All right, it looks like we are live on all of the platforms, so we can go ahead and get it started here. We will take the chat off the screen. And so welcome, everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. One of those non-QM loans that we specialize is a 1099 loan, which is going to be our deep dive topic for today. So every day we pull up the live rates of a bunch of different programs. We go over them, and then we do a deep dive into a different topic every day, which today will be 1099 loans. Jose, with 27 years of experience as a loan officer and a realtor, has dealt with these loans over the course of years, and he's going to pull up some actual quotes and do a deep dive into that topic later. But before we do that, like we do every day, we'll go ahead and pull up our pricing tool and pull the live rates for today. So, Nick, let's go ahead and pull up today's pricing and see what the market is looking like this morning.
All right, thank you, sir. Let me go ahead and switch my screen, and we will check it out. All right. So as Kyle mentioned, this is our pricing tool for our mortgage professionals. We have over 300 licensed loan officers, and we can do loans for primary second homes in 22 states. And we can do our business purpose DSCR loans in 44 states, pretty much every state out there. So if you'd like a full loan estimate with a full breakdown, please get with one of our team members. Our pricing tool here will show the general rates of our general programs. It's just after 11 a.m. Eastern on April 28th. So we have our general programs live here on the Pricer, and we're going to check out the general rates and APR. So if you want a full breakdown, please get with our team. But let's check out a basic scenario here across our basic programs. So we'll set up our Pricer with a $400,000 loan amount. We will set the LTV to 80% LTV. That means 80% loan, 20% down payment. We will tell the computer to find the best rate at one discount point in cost. That's what the desired price of 99 means. Most of our customers are asking to buy down the rate a little bit since rates are a little bit higher than we would like. So this is the typical request. Now we're going to check out our different loan programs. Conforming, conventional, we'll check out first. Then we'll go to FHA, typically the next option that people look at. And then we'll check out expanded guidelines, which is non-QM, where we have over 5,000 additional loan programs with alternative income documentation options. Now, we don't do the VA live since that's only for our eligible veterans, so we appreciate the service there of our vets and would be happy to quote it. And we did a live one earlier this week, but since not everybody qualifies as a veteran, we don't do that live every day. And same with USDA, only properties in USDA eligible areas are eligible for USDA quotes. So since not everybody's shopping in those areas, we don't do those live, but we did a deep dive earlier this week, so check those episodes out. Now for today, we'll start with conforming conventional. We'll do a purchase, 30-year fixed, standard setup, primary home, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all of our demos today, we'll use an estimated FICO score of 760 and an estimated debt to income ratio of 40. So with these basic settings, let's check out our conventional rates this morning. Right about the same as it was, just a hair lower than it was yesterday. So again, we love watching this. Sometimes no movement is good, right? So here we can see the best option the computer found, a 6.49 rate for 0.875 discount points and costs, and a final APR of 6.662. Right about where it's been most of this week. Obviously much better than the last few months. So for those out there shopping, let's keep rocking and rolling. Conventional is a great option. Now, if there's for any reason a customer doesn't qualify for conventional, typically the next option that we check out is FHA. So if we set up our pricer with the same exact scenario, simply switch this to FHA. FHA does allow a little more leniency on credit type events, as well as a little more leniency on the debt to income, but we'll keep everything else the same so we can compare apples to apples across these programs. FHA went down a little bit from yesterday, so that's good. So the best option the computer found this morning here is a 5.625 rate for 1 discount point in cost and a final APR of 6.227. So a little bit lower in this case than the conventional option. So FHA does have the upfront mortgage insurance and yearly mortgage insurance, but there has been some recent changes where actually in this scenario for this borrower, this FHA program is actually a little bit cheaper, 6.227 APR. When we compare across programs, we always have to use the APR. And remember, the conventional was around 6.6. So great options here. Definitely recommend those out there shopping for conventional loans. Also check out FHA. Might actually be a little bit cheaper like this scenario. Now, if for any reason our customer doesn't qualify for conventional or FHA, many other banks and lenders don't have any other options. That's where we love to come in with our expanded guidelines, aka non-QM, where we have over 5,000 additional programs beyond what we just saw in order to use alternative income. So when we select non-QM, we have a new option pop up here for income verification. Now, full doc is what we do for conventional and FHA. That would mean 2 years of tax returns. So we would typically choose a non-QM program to choose a different option here. So we have 1 year alt doc, 2 year alt doc options. We have asset related options where it's not even employment related. We're just going to use assets. We have business bank statement options. We have our DSCR options we'll talk about here in a minute for investment properties. Our personal bank statement options. We have VOE, 1099, P&L options, all these different options, which we go over on different shows. So check those different episodes. But for every morning, the most common option we select is our personal bank statement 12-month program. And that is for our self-employed borrowers. Many times our self-employed borrowers, when they have 2 years of tax returns, have various write-offs on their companies or their self-employed activity, and therefore cannot qualify when they should otherwise qualify. So in order to get them the home of their dreams or qualify when they won't qualify at all, we would, instead of using 2 years of tax returns, simply use the last 12 bank statements to then determine a debt to income ratio for this borrower using their actual cash bank statements rather than their tax returns. So most of our self-employed borrowers can qualify where they wouldn't qualify at all or qualify for much more income and therefore the home of their dreams. So this is a great option, a great solution for our borrowers who would not otherwise qualify. So let's check out our rates this morning. And remember, these are solutions. The rates are going to be a little bit higher, but very comparable. We love it when the non-QM is a very comparable option to our conventional options. So the best one we have this morning, the computer found 7.125 rate for 1 discount point in cost and a final APR of 7.205. So remember, the conventional APR was 6.6 something, the FHA was 6.2 something, and now we have a non-QM option, very comparable, just at 7.2 something. So all of our different options are very comparable. Definitely recommend for those out there shopping, compare all of these different options, and please get with one of our team members so they can quote which one works best for you. And if you scroll down this sheet, you see there's hundreds of different options really that use these alternative income. So there's all kinds of different variations here. Some may allow credit events such as foreclosures, bankruptcies, all kinds of different versions of these programs. So we'd be happy to find the one that fits best. Now, before we get into Jose's deep dive into a specific non-QM program, let's do our final live quotes for investment properties. So we always want to do an investment property live quote for our customers out there shopping for whether it's their first investment property or their 100th investment property. We have options for them. So for investment properties, we have our conforming conventional options, and we'll compare that with our expanded guidelines non-QM options. Remember, FHA, VA, USDA, not eligible for investment properties, so we simply check out the two options here. So conforming conventional, great for our customers that qualify full doc. We'll keep everything else the same as all of our other demos. The only thing we changed was investment property up here. So let's check out the rates this morning for conventional investment properties. So as we say every morning, there has been additional loan level price adjustments, basically costs that have been added to these programs by the government sponsored entities that operate these. So the best option we have, unfortunately, not one discount point in cost. So best option computer found, 7.125 rate for 3.125 discount points in cost, which is quite a bit, and a final APR of 7.372. So great options for our customers that do qualify full doc, but a pretty hefty amount of points here. So many times our investors would like a higher rate for a lower cost so they can deploy these, in this case, $12,500 into another investment. So even if we cruise down the rate sheet here, try to find a better option, there are, obviously a little bit lower cost options, but nothing really in the one discount point. So we love to quote these for our investors that do qualify, but I definitely recommend those looking for investment properties compare those conventional rates to our final demo today, where we will do an investment property under our expanded guidelines non-QM. So when we select this option for investment property, we now have two new things that pop up. First, we need to select our income option. So when we're doing an investment property, our most popular option by far is the DSCR program, and that's because it doesn't actually require any income or employment from the borrower. We're simply going to use the estimated rental income from the property to determine if that can cover the expenses of the mortgage. If the rents cover the PITIA of the mortgage we're proposing here, that is a ratio of 1.00 or higher. Basically, the rents can cover the property expenses, and there is cash flow, so that's greater than one ratio. We have tons of programs for that. We even have programs for ratios under one, meaning the rents don't quite cover the expenses, and there's actually a little bit of a negative cash flow to carry that property. There's still options for that. So please get with our team. They will be happy to navigate you through all those options, but I'll go ahead and delete that today just so we can see all the different combos. And finally, for an investment property non-QM, there's always a prepayment penalty standard. We'll always select 3 years, which is standard for these programs. However, we can select 0 if we like. That will limit the loan programs and cost more. And there are some loan programs that allow 5 years, which will save a little bit of money, but will have less results and less loan programs. So 3 years is a standard. We'll always do that for our demo today. So let's check out our DSCR rates this morning. So we got some great options here. We love it when we have our DSCR rates in the 7s, very comparable to what you just saw for an investment property. Right here, 7.5 rate, the best option for 0.85 discount points in cost, and a final APR of 7.575. So almost identical here. The main thing is the discount points. So instead of 3 discount points was the best option conventional, now we have an option with 0.85 discount points, and our investors can then deploy that extra cash into other investments. So these options are typically the best for our investors out there. Definitely recommend anybody out there shopping for investment properties, check these quotes out. We can cash out, refinance multiple properties to purchase multiple properties because there's no income or employment involved. We can have multiple applications at the same time. So some of our investors have 5, 10 applications going at once for different DSCR loans. And if we cruise down the sheet here, you'll see there's a ton of different options for different DSCR values, different prepayment penalty amounts, just tons of different options. Some of these may allow things like credit events. Some of these may allow things like short-term rental income. So please get with our team. They'll find which of the hundreds of programs we have available fit best for your scenario. So now let me go ahead and switch my screen, and we'll get into Jose's example here. Give me 1 second. Pull back up our graphic. And today's topic is going to be on a very specific subset of our non-QM programs. So you noticed when I went through the live pricer there, one of the options is 1099. So there's a 1 year and a 2 year option there. So what Jose is going to talk about is all the ins and outs when we select that 1099 option and what it really means, what programs apply to it, and obviously show us some live quotes. So if you're ready there, Jose, go ahead and take it over.
Yes, sir. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. 1099 is a great program for self-employed borrowers. 1099 borrowers are responsible for their own taxes. They are usually an independent contractor, not an employee, but usually rendering their services to the same company. Good example of a 1099, and one of the ones that we can probably make the best use of this is real estate agents, right? Most of the time, when we're thinking about a program for real estate agents, we're thinking bank statements, we're thinking P&L, but we're not thinking 1099, which allows up to 90% of the gross amount of the 1099 to be used for income purposes. So that is much higher than you're usually going to receive with a bank statement program, much less documentation required as well. So I do have some purchase examples and some refi examples for you here. Our first example is primary purchase, 10% down payment. And you will note very good rates here. We have 9.75 at par, and you can buy it down all the way to 8.5%, and that's a little bit over 2.25 points for our $450,000 loan here. So again, primary purchase 9.75 lowest cost option, 8.5 lowest rate option. Now, 1099 investment purchase actually have an option with only 10% down. Now, rate is a little bit higher on this option because it's pretty much the only one that allows investment 1099 at a 90% LTV. So you do see 10.25% has a cost of roughly half a point, and you can buy it down all the way to 9% at a cost of roughly just under 3 points. But this is 90% LTV for an investment property purchase. So to put a little context into our rates, I have here 15% down primary, and you will notice that the rates get substantially better because this is more in line with what the majority of the options are for this program. 85% LTV. The 90% is an extreme example. So we're looking at 8.624, actually giving us a lender credit of $531. And check out that super low rate there, 7.374 at a cost of just a little bit above 2.25 points loan discount. So now we're getting into conforming rates here, even though this is a 1099 program using only 1099 form. And now we have our 15% down investment. And again, look at the rates, how much better they get once you drop the LTV from 90 to 85, which is more in line with what the majority of the options are for this program. So you have 9.374 giving a lender credit, and you can buy it down all the way to 7.874 at a cost just under 3 points. And here we have our 1099 primary cash out refi at a 90%. Now, you all will know that normally we're capped at 5% lower. In this case, we do have a 90% option for the cash out refi. It's the same option that gave us 90% on the investment as well. Obviously, rates are a little higher here, 10.5, giving us a lender credit, and you can buy it down all the way to 9.25 at a cost just under 2.5 points. And then we have our 1099 investment cash out. This one does give us the usual 5% LTV reduction. And again, cash out, higher risk for the investor. So we're looking at 11%, costing just a little bit over 1 point, and you can buy it down all the way to 10.25%. That's 85% LTV. So I'm showing you here the 80% LTV investment cash out refi, again, to put a little bit of context into our rates here, so you can see that at the more customary loan to value of 80% for a cash out refi on a 1099 option. Now we do have amazing rates here with 9.124, giving us a lender credit of $500, and you can buy it down all the way to 7.624% at a cost just under 3 points. So these are all some amazing options, 1099 programs. You definitely have to consider this program when you have the self-employed borrower that receives a 1099, because this program usually will let you use 90% of the gross amount of the 1099 to qualify the borrower. So don't miss out on opportunities. There are many people that receive 1099s, and some people mistakenly consider 1099 almost like they're an employee, because sometimes the borrowers almost consider themselves an employee because they are under the assumption that just because they receive the monies from the same company that they are an employee, but they're actually an independently contracted worker that is self-employed.
So I've done some for insurance agents, very common, right? Insurance agents, life insurance agent, any type of insurance agent, right? Realtors, very common. We love to work with our partners that are realtors. 1099 is a great option, guys. And other loan officers, people at our company, we're W-2, obviously, but some companies in some states do allow 1099. So that's another great example for our fellow loan officers out there. Lots of people that, like Jose said, only work for one company, so they have a kind of a preconceived notion that since they only work for one company, they might not be 1099. But if they get paid via 1099, we can use these programs. So many times, even though they only work for one company, we can still use it. I don't see any questions in here today. Hopefully everybody can understand when they would want to use these programs. Definitely a little easier, I would say, Jose, than bank statements and other things. So, if you have an eligible borrower, this is definitely something that I would be quoting alongside any other non-QM stuff, bank statement, P&L. The 1099 is probably the easiest of all three, right, Jose? Because you're just simply taking a document that's printed, and that's it. Done. You don't have to fabricate a P&L. Don't have to run through bank statements and do your own calculations and stuff like that and verify calculations. You just have one piece of paper with one number on it, and you're good to go.
Absolutely.
All right, perfect. Well, thank you. That was great. So if you are a loan officer on our team, remember to consider that when quoting people. If you are a loan officer out there that's not on our team, well, feel free to visit us at themortgagecalculator.com. We can teach you about these programs. And if you're a borrower out there that you think you may qualify for a 1099 loan, then visit us at themortgagecalculator.com, and we can pair you up with one of our loan officer consultants that can walk you through the process here. Now, we do this show every single weekday at 11 a.m. Eastern time. We go through the live rates like we did today and do a deep dive into a different topic every day. So thank you, Nick. Thank you, Jose. Thank you, everyone, for tuning in. And we hope to see everybody Monday morning at 11 a.m. Eastern for the next show. Take care, everyone.
Thanks, everyone.
Thank you, everybody.